of this case take profit or stop loss level. Right. So in this example here, right, we can see uh, this level here has been identified as a resistance area. Why is that? Because we can see price making a swing high resistance here once, and then making another swing high resistance here again for the second time. So this is clearly illustrating to us that this is a very significant resistance level. We can identify this level as a multi-swing high resistance, and price has reacted off it twice. So now let's just say we are in a scenario where we see price is trading around here. We are expecting a potential bullish breakout, right? We're expecting a bullish breakout. And because we have seen price react off this level twice, we are identifying our take profit. Oh, okay. Sorry. Price has reacted off this level twice. And because we have a fixed take profit approach, so in this fixed take profit approach, we have a fixed TP of 100 pips every time. So let's just assume this approach involves having a fixed TP of 100 pips no matter where we've entered the trade. So in this case, let's just say we decided to go long here. We have a potential bullish breakout here. And because of our fixed TP of 100 pips, we come to the, because of this entry point here, we have our TP at this level here, right? This is at exactly 100, right? This level here, TP comes up to exactly 100. So we're expecting price to go up here. So let's see what happens in this type of scenario, or what typically can happen in this type of scenario. Right, so here, as we mentioned, this is the first swing high resistance. This is the second swing high resistance. We have identified a potential bullish breakout opportunity here. So we go long, but because our TP is a fixed TP of 100 pips for every trade, we can see that this time here, that when we enter at this position here with a fixed TP of 100, we see that the TP lies at exactly the resistance point here, right? The TP lies exactly at the resistance point. But in this scenario, price shoots up, but it actually stalls just underneath the resistance area and then reverses to drop lower, right? So you can see here by having a fixed TP, sometimes um, price may not reach the resistance level every time, right? Just because this we have identified swing high here, number one, and swing high number two as a major resistance area, it doesn't mean price is always going to come up to exactly this point. So this is some of the problems that we can face with having a fixed TP as well. So in a scenario like this, it is more uh, advisable to have a dynamic TP. So in this case, because we have identified this level as a major resistance, we shall identify a TP that's probably about maybe 10 pips to 15 pips underneath this resistance level. So in this case, we would probably be identifying our TP with a level of 90, for example, between 85 and 90, rather than having a fixed TP of 100. Right, so the thing is here, price tends to reverse off big areas of resistances and support. So that means price doesn't have to reach that level exactly, but it can come very close to that level before reversing to drop lower, or before reversing to go higher, right? So that's what this is trying to illustrate. So when we have a fixed TP, sometimes that TP can end up being placed at exactly the resistance point or even beyond the resistance point, which means that price may not actually come up and hit that TP. So what we're trying to do is, by placing the TP just underneath a major resistance zone, we are helping to improve the probability of a successful trade. Right, so here, if we had placed our TP just underneath the major resistance zone, right, this is swing high 1, swing high 2, major resistance level here or zone. But by placing or identifying our TP 10 to 15 pips, right, roughly 10 to 15 pips underneath the major resistance zone. So if you put your TP as 85 to 90, then it was quite likely that in this type of scenario, the price would have hit our TP and we would have exited the position for a profit, right? So by uh, identifying realistic TP zones or TP levels, we are increasing the probability of a successful trade. And that is why we say here we place our take profit slightly before the key resistance level to give us or to improve the probability of a successful trade. And the second lesson is we don't blindly follow a fixed take profit because someone tells us to do so, or because in our head we have said, okay, for every trade I must make 50 pips or 100 pips, right? So if we have that sort of fixed approach, uh, we may not achieve successful trades every time because the markets are dynamic. Every strategy is always changing. Markets are evolving. So we need to be able to adapt. So by identifying major resistance and support levels and placing our TPs, so in the case of resistance, we should be placing our TP just below the resistance area for long positions. And if it's a short position and we are shorting, we should be placing the TP slightly above the support area. So by doing so, this improves the probability of a successful trade because we know uh, that price doesn't always have to fall towards the support level exactly. It may stall just above the support level and then reverse to go higher. Similarly, when prices are rising, prices may not always rise into the resistance zone. They can always stall just underneath it and then proceed to drop lower. I'm sure many of us have experienced this. We see price coming very close to our TP, whether we have gone long or short, but because of some resistance or support levels that maybe we had missed, we didn't identify that in our analysis. Price comes very close to the resistance or comes very close to the support, but stalls just before reaching those respective levels, and then we miss out on closing out the trade at for a profit, right? So this is why when we have a fixed TP approach, this can have negative impact on our hit ratio for successful trades. All right, so in this case here, in this diagram here, we can assume that price is trading in a sideways range, right? So when price trades in this sideways range as seen here, right, we can see that this is a major resistance area. This is swing high 1, swing high 2, swing high 3. Similarly here, we can see price is bounced off here, this support level. Oh, sorry, this shouldn't be resistance. Apologies, this should be major support. Right, so you can see price making a swing low bounce here, once, twice, three times. Right, so we can assume that in this market structure, we are seeing sideways trading. Price is trading sideways, so we are quite easily we can easily identify a major resistance area as well as a major support area. Now let's just assume that we've seen price make a resistance, a swing high resistance here once, and also makes a second swing high resistance here. So at this point here, let's just say we decide to enter a sell entry, right? So we open a sell entry here. So we've decided to go short at the major resistance, but because sometimes price may go beyond the major resistance, we don't put our stop loss at exactly the resistance level. We need to give ourselves about at least a 10 to 15 pip buffer for the stop loss. So we should ideally place the stop loss at about 10 to 15 pips above the major resistance area or above the sell entry to give ourselves that little bit of buffer. So should price reverse and come back to the resistance point, sometimes price can always go slightly above, but because we have this buffer of 10 to 15 pips, then it gives us that sufficient allowance to ride through a little bit of market volatility. And should price then reverse and continue to drop lower, at least we are still in the trade, and we may uh, achieve a profitable trade. So similarly, when we're identifying a take profit, and we see that this is a major support level here, ideally we're going to place the stop loss once again. Sorry, the take profit level once again, 10 to 15 pips above, right? Of course, there can be instances where price reaches the support level or even smashes through the support level and drop lower. But uh, to increase the probability of a successful trade, ideally it should be better that we identify the take profit at slightly above the major support zone, especially when we see price continuing to range within two levels, right? So when the range bound trading or in any long or short position, typically try to identify the take profit for the short side at slightly above a major support zone. Similarly, if we are going long, right? Let me just tidy up. Oops. Similarly, if we have decided to go long, like we see here, price making a swing low bounce here, second swing low bounce here. So we decide, okay, over here we've entered a long position, but because we see this as a major support level here, our stop loss for the long is going to be placed once again about 10 to 15 pips underneath, right? So this is a major support zone. We've identified a buy entry here, so we go long. But because price can always pull back towards the support level and maybe dip a little bit underneath it, we need to give ourselves a little bit of allowance, and that allowance for the stop loss can be anything between 10 to 15 pips, depending on uh, your risk management style. And then as price is rising higher, we know that this is a major resistance level here. But of course, we don't want to put our or identify a TP at exactly the resistance level. We'll give ourselves a buffer again. So in this case, the TP will be set right maybe 10 pips underneath the major resistance. So right, so that's what we mean by proper SL and TP placement, or more of a dynamic stop loss and take profit placement, right? So by identifying major resistance areas, major support areas, we are able to then accordingly identify a suitable stop loss level. So we know this is a major resistance. If we go short here, the stop loss should be placed slightly above this major resistance. And then as price is falling down towards a major support, ideally we should identify a take profit that's slightly above the major support zone. Similarly, if we go long, we know that this is a major support area here, a support zone. We will identify a stop loss that's slightly below this major support. And as price rises up towards a major resistance zone, we will identify a TP that's slightly underneath it. So by identifying support and resistance levels, and then choosing the stop loss and take profit levels, we are actually using a dynamic approach, right? We're not using a fixed TP or fixed SL approach, right? We are trying to identify major support and resistance levels, and then using a dynamic approach to identify the ideal or suitable placements for the SLs and take profits. All right, so here we can also use FIBO confluence or Fibonacci levels to help us identify stop loss and take profit levels, right? So if we have identified a major FIBO confluence or maybe a Fibonacci level at a particular point here, this is resistance. Similarly, we will set our TP to be just underneath this Fibonacci confluence or Fibonacci resistance. Similarly, when we have also identified a support area here underneath the buy entry via Fibonacci confluence, right? Then, of course, we will not set our stop loss at exactly the Fibonacci level. We need to give ourselves a little bit of allowance. So hence, we will set that stop loss underneath the Fibonacci support or Fibonacci confluence, right? So this gives us breathing space so that we may so that it helps us to identify more suitable stop loss and take profit levels. All right, so here we can see an example of having a fixed SL, right? We see here this is point 0.1. There's a nice swing low support here at point 0.1. There's also another nice swing low here at point 0.2. We can see that clearly in the green line here, this is a very significant support level for price. But let's just, and then now here we are identifying a potential bullish breakout strategy. So we enter at this level here. This looks like the price for gold, right? So we enter a long position here. But because we have seen this level to be a support, a major support level, and also because our strategy has a fixed SL of 100 pips, but because we've entered here at this particular point and we use a fixed TP, oh sorry, fixed SL of 100 pips, it shows us that the SL is actually going to be placed above the major support zone. So now this is not good because typically price will fall very close to the support zone, and by having a SL that's placed above the stop loss, having a stop loss or SL that's placed above the support zone, this very likely means that this stop loss is going to be triggered. Ideally, this stop loss should be placed below the major support zone. So that means we cannot use a fixed SL approach, and we need to use a dynamic SL approach. right? So in this scenario here, the bullish breakout did not materialize. Price actually reversed to drop lower, but it actually found support at around the support zone or just above the support zone before reversing to go higher. See, by having a fixed SL of 100 pips from the entry, it ends up that the SL is placed exact or just above a major support zone, and this means that it's quite likely to be triggered should price pull back. Ideally, this stop loss should be placed below the support zone so as to give us that little bit of buffer, and that is why having a dynamic approach to SL as well is it's a more suitable approach than having a fixed SL strategy. Right. So in this diagram here or this chart here, we can see that by placing the stop loss just below the major support zone, right? This can be anything between 10 to 15 pips. It gives us a little bit of allowance. And when price reverses off this level, we may be able to close out the position for a small loss or maybe even close out the position for break even. Right. So by using a dynamic stop loss placement, we use it to manage risk in which the stop loss level is adjusted dynamically based on market conditions. Right. So this is looking at support and resistance levels. The level of the stop loss is continually moved to a more favorable position as the price of an asset moves in the desired direction. Right. So this is in a way of trailing our stop loss manually as well. The goal of the dynamic stop loss is to lock in profits while minimizing potential losses. The placement of the stop loss can be determined by various technical analysis indicators. Right, we said we can use Fibonacci retracements, Fibonacci extensions, or swing lows, or identifying significant swing lows and significant swing highs. Right, so we can use that as well to help us identify a more suitable placement for the stop loss. All right, so now we're going to look at dynamic stop loss placement in this example one. Right, so let's just say in this scenario, we have identified a potential sell entry here. So as price is rising up, we're going to open a sell entry. We've identified the take profit at just above this swing low here, right? You can see this is the absolute low. So we've identified a take profit that's slightly above the swing low support. And we see this level here. This is a swing high, right? You can see the top of the wick here. This is a swing high support. So just based on this, we should not be placing the stop loss at exactly the top of the wick. By placing it slightly above the wick, it gives us a little bit of allowance, right? But in this case here, we can also see that when we use our Fibonacci retracements and Fibonacci projection, we actually find the negative 27.2 and 61.8 Fibonacci expansion and projections to lie at a level that's around 88.34. Right, so not only is the wick here, right? We identified this wick here, but because we also now have an additional we have additional information such as the Fibonacci expansion and Fibonacci projection telling us that this is actually a more significant resistance zone. So we should actually be moving the stop loss above this level, right? So in this case, you can see stop loss is now not only placed above this high of the wick, but it's also placed above the negative 27.2% Fibonacci expansion as well as the 61.8% Fibonacci projection, right? So at 88.50, it's placed about 15 pips above where it was originally identified, right? So in this case, because we see the combination of this wick here of the swing high resistance, we also have a Fibonacci expansion and Fibonacci projection. We need to identify a stop loss level that's above all these 3 points, right? So this gives us sufficient allowance or buffer. So should price continue to rise, it may run into resistance here. And if it goes beyond, it's quite likely to run into resistance around the Fibonacci confluence before reversing to drop lower. So when it reverses to drop lower, we may be able to close out the position for a smaller loss, or perhaps even close it out for break even. Or if there's good momentum as well, right? There's finally this bearish momentum, then we could lock in a profitable trade, right? So stop loss, this is important. Stop loss should be placed beyond the Fibonacci confluence area instead, right? Because we saw this was a pullback resistance here. We had originally identified the stop loss to be at 88.34, but because we have this Fibonacci confluence area here, we need to place the stop loss beyond it, or in this case, above the confluence area. Right. So in this example, you can see quite clearly price uh, broke above the pullback resistance level here, but it stalled around the Fibonacci confluence. And because we had placed the stop loss and above this confluence, right, level, perhaps this is about, yeah, you can see this is at 88.40. We've put the stop loss at 88.51. So about 11 pips above it. So that gives us a little bit of breathing space. So that should price stall around this level and continue to drop lower, we are still in the trade, right? We're still in the trade. We didn't get stopped out unnecessarily because we had identified a major resistance based on price action. We also had identified a major resistance zone based on Fibonacci confluence. And by doing that, we can then identify a suitable stop loss level to place the stop loss, right? Because if you had used just a fixed SL approach, stop loss approach, then very likely maybe we would have just put it 10 pips above the swing high resistance here, this pullback resistance, and without accounting for the Fibonacci confluence resistance, then of course we may be stopped out unnecessarily, right? So this is why the dynamic stop loss placement is important as well. Right, so in this case, we can see price reversed off the Fibonacci confluence, and in this case, returned back to the sell entry, and the momentum continued all the way to the identified take profit. But of course, price may not always continue, right? Sometimes when it reverses off here, if there's no follow through, maybe price would just stall around here as well. So at least when it comes back to this level, we may not lock in a full TP, but at least we are able to exit the position for break even. Right now, this is a TP placement uh, example of a dynamic TP placement. So similarly here, we have identified a sell entry based on a Fibonacci retracement at 78%. We've identified a potential short entry at 87.62. We also see that the top of this wick here is at about there's a swing high here. So we've placed our stop loss just slightly above the swing high. And this is also a swing low here. So we've placed the TP at exactly 84.66. But of course, because we know this is the absolute swing low, ideally the TP should be placed slightly above. So maybe at about 85 or 84.80, for example. Let's see what the chart shows us. So here, right, we can see we find price has triggered, the short entry has been triggered and is dropping lower. But because our TP is fixed at the swing low here, let's see what happens. Right, so then once price has made this high, we did this Fibonacci retracement from 0.1 to 0.2. Right, so we can see when we do the Fibonacci retracement here, we find that the 78.6% Fibonacci retracement level lies slightly above the swing low. This is at 84.93. Previously, TP was at 84.66, taking the absolute swing low. But as price is falling down, we have a low point here, swing low here, a swing high here. Sorry, swing high at 0.2, swing low at 0.1. We draw the Fibonacci retracement. We are using the 78.6 to identify uh, a dynamic TP placement, right? So we are placing the TP at about the 78.6% Fibonacci retracement, which in this case is about 84.93, which is about 27 pips above the original TP. So in this case, in this example, you can see price drops quite nicely all the way to the 78.6% Fibonacci retracement before bouncing to go higher. In this case also, I would probably place the TP at slightly above the 78.6 also. I would not place the TP at exactly 78.6% retracement. I would probably place it slightly above it to just to be sure. So in this case, I may set the TP at 85 exactly, right? By placing the TP at 85 exactly, it is slightly above the 78.6% Fibonacci retracement, as well as being obviously slightly above the swing low here. So this increases the probability of a profitable trade. So you can see here in this example, price just touched the TP at exactly 78.6 before bouncing higher, right? In some cases, it may not even hit the 78.6 retracement, but just stall slightly above it. So that is why I would say, ideally in this example, the TP should be placed slightly above the 78.6% Fibonacci retracement as well. All right, so here, right, so we can see this is the same thing. Price bounces off the 78.6% and proceeds to return all the way to the entry, not only to the entry, but going towards all the way towards the stop loss as well. All right, here in this example, we're going to be looking at uh, using a dynamic TP placement for the long side, right? This was for the short entry. We are using a dynamic TP placement for the short entry. Now we're going to look at an example for the long entry. Right, so in this case, we have the New Zealand dollar and Japanese yen. So we're looking at the Kiwi yen. So price has been trending lower. So we have identified this descending trend line here, right? You can see price respecting this descending trend line. But now that we are looking like we have done our analysis and we have come to the conclusion that this is a potential bullish breakout strategy. So this is how we've identified the buy entry at 83.61. We are putting a stop loss at slightly below this pullback level here, as well as this descending trend line. And take profit has been identified via this Fibonacci expansion and Fibonacci extension. So Fibonacci extension is from here, 0.1 to 0.2, right? So by looking at this extension here, we're looking at 127% Fibonacci extension. And then Fibonacci expansion is from here, zero point 0 to 0.1. So we're looking at the negative 37.2% Fibonacci expansion. So these two Fibonacci levels have helped us to identify a potential resistance area. And because of that, we should ideally place a take profit to slightly below this confluence area. So in this case, we can see the TP, by having the TP placed above the confluence area, price actually reversed just underneath it, missing the TP by a few pips before dropping all the way down to our buy entry. That is why when we have identified a major confluence area via Fibonacci, in this case, because this is a long position, the TP should ideally be placed slightly below it, right? By placing the TP slightly below this confluence area, we are increasing the probability of a successful trade. Right, so now we can see by placing the TP at about 10 pips, right? Roughly, original TP was at 83.91. And now we've moved it to 83.81. So by placing the TP 10 pips underneath the original level, or in this case, placing it 6 pips underneath the confluence, we can see the 127 extension is at 83.86, or let's just say 83.87. By placing the TP 7 pips underneath this confluence here, we are increasing the probability of a successful trade, right? So this is what we mean. All right, okay. I've come towards the end of today's webinar. Right, okay. Is there anything that you would like me to repeat? Because we still have time. I can go through the slides again if there's any particular point you would like me to repeat. Otherwise, I can dive into the charts on TradingView and we can try and identify where the current resistance and support levels are for the dollar index and maybe some of the other currency pairs. Is there anything else that you would like me to cover before we go on to the charts? All right. Okay. All right. Okay. I guess there's no questions or no request to repeat any of the material. So if not, with that, let's just go over to TradingView and let's just see where the resistance and support levels are for the dollar index. I'm going to use the dollar. Yeah, we'll start off with the dollar index. I'm on the 4-hour time frame, right? Okay. So these were some of the support and resistance levels that were identified last week. All right, so this week, let's just start with a clean slate. Let's remove everything. So I'm on the 4-hour time frame for dollar index. So as you can see here, last Friday, 2nd of Feb, we had a very strong jobs data or NFP, non-farm payrolls data being released. So we can see that the labor market report was very strong in the US. So that creates a strong demand for the US dollar. And we can see dollar index rocketing above. So this was previously a resistance level for the dollar index, right? This level here at 103.73. This was a previous resistance level here, right? You can see price failing to break above 103.73 several times since 17th of Jan, but because we had strong jobs data that pushed price above it. So now this level here, what was previously a pullback support level, a resistance level, could now potentially function as a pullback support level. Right, this is one support level here, and we can also see this was also another resistance that was taken out as well. So this resistance level was broken yesterday. So this is also what was previously a resistance could now function as support. So now the first support for the dollar index is at 104.26 and second support is at 103.73. So this is how we've identified the support levels for dollar index. Right. So when we look across here, if we zoom out a little bit, right, we can try and do a Fibonacci retracement from here. This swing high 1st of November going down to this low here, 20th of December. We can see that price ran into resistance quite close to where the 61.8% Fibonacci retracement is. Right, so this does look like to be a pretty significant resistance area. And if we zoom out a little bit more, we can see price previously finding support around 104.80. This was previously functioning as a pullback support here on 20th September 2023. And once again, here is another pullback support on 6th November 2023. Right, so what was previously a pullback support level could now function as a potential resistance level. So we can see that the first resistance for dollar index is at 104.81, which is also a level that aligns quite close to the 61.8% Fibonacci retracement. Right, so we have a pretty significant resistance zone for the dollar index around this area. Now moving higher up, where could the second resistance be? Let's look at where the 78.6% Fibonacci retracement is. Right, Fibonacci retracement at 78.6% is around this pullback, close to this pullback resistance level here. So I would use 105.96 to identify as the second resistance. Right, so do take note, demand for the dollar has been strong, but it's pulling back as we speak, but it could find support around 104.26. So if you do see price return to 104.26 and it reverses higher, it may give us a decent opportunity to go long on dollar index again. So if you do go long on the dollar index and price reverses off 104.26, where we would be looking to identify a potential take profit would be around this resistance zone. So we're not going to identify the take profit at exactly the first resistance, but anywhere between 104.60 to 104.80 is where we should be looking to identify a suitable take profit should price bounce off 104.26. So do take note, 104.60 is where we can identify a potential take profit for a long dollar index position should it bounce off 104.26. All right, so these are the main resistance levels and support levels for the dollar index on the 4-hour time frame. Right, we've also, let's just look at the Aussie today because I think we had the RBA release its monetary policy statement today. I believe it was released just about 10 minutes ago. So let's see where some of the major resistance and significant support levels are. Right, so if you look at on the support side, and we have used a Fibonacci retracement here from this swing low on, what is this, 10th of November, ending with the high here on 28th December, right? We can see that the 78.6% Fibonacci retracement aligns quite well with this pullback support level at 64.60. So that's how we identified the first support. Second support is this overlap level here, right? We see price finding support at 64.15 on 7th of November, and then when it broke underneath it, finding resistance on 9th of November, creating a previous overlap resistance. But of course, with price breaking above it, this level could now potentially function as a potential overlap support. That's why we've identified 64.15 as the second support. So right now, we do see the Aussie rising based on the current 4-hour candle. But because we have identified the first resistance at 65.18, should we have any long Aussie positions here, we should be identifying a potential take profit at about maybe 65.13 onwards, right? So with price currently trading about 65.03, perhaps a potential take profit or suitable take profit to identify for any long Aussie positions would be just underneath the first resistance at 65.18. So probably around 65.13 to 65.15 would be a suitable zone to identify the take profit for any long Aussie positions now, right? I think we can also do a Fibonacci retracement. Let's start this retracement from here. 2nd of Feb going down to the 5th of Feb. Let's see if the 23 or 38 line up well with the first resistance. So we have the 38% Fibonacci retracement aligned quite well with the first resistance as well. So similarly, we can see 38.2% Fibonacci is at 65.22. So of course, we would need to identify a take profit that's slightly below this level here as price is rising up. All right. Okay. And second resistance for the Aussie is simply going to be this swing high resistance or pullback resistance that occurred last week, 2nd of Feb, which is at 66.02. All right, so this is an example of how we can identify major support and resistance areas and then try to identify suitable take profit zones based on how price is reacting. Right, so this is what we have for the Aussie. Uh, right, okay, do let me know if there's any analysis that you'd like me to cover as well. Should there be any interest for any of the other currency pairs, the crosses or the majors, do let me know. I'll be more than happy to go through the analysis with you. Otherwise, I'll just cover gold and then maybe I'll come back to any of the majors again. So let's just go on to gold and see where some of the current resistance and support levels lie. Right. Okay. We can see quite clearly here that 2013 is a pretty significant support, right? Prices bounced off this level here on 24th of Jan, 25th of Jan, and you can even argue here on 5th of Feb. Yesterday, price came very close to this level before reversing. So this is a very good example of why we should place the TP take profit at slightly above the support zone, right? So let's just say we had we had gone short on gold prices yesterday, right? So we gone short here at about 1900 hours on UTC time. Do take note, I'm on UTC time here. We decided to go short at about 2030. Here, price is falling, coming close to the first support. But because we know this is a major support at 2013, we should ideally be placing the TP slightly above this major support zone. So we can see here, price actually dropped as low as 2014. Right, price dropped as low as 2014. But because we can see this is 2013 here, so by placing our TP at about 2015, we would have likely to have booked a profitable trade, right? So this is a very good example of how using a dynamic TP approach and by placing the TP slightly above a major support zone would have allowed us to book a profitable short trade, right? If we had placed our TP at exactly 2013.33 or even worse, place it at here 2009.81, there's no way we would have been able to capitalize on this pullback or on this fall for gold prices here. So this is why it is quite important to always use dynamic approach to TP and SL, because you can clearly see here, if we had placed our TP at exactly 2013 or 33, there's no way we would have booked a profitable short trade here. But by placing it at about perhaps 2015 or maybe 2016, then for sure we would have booked a profitable trade for this short gold position. All right, so it's quite clear where the first support is. Second support is at 2001.82, right? So similarly, well, now gold prices starting to fall again, right? So with gold prices falling, we can then once again identify a potential take profit because price bounced off 2015.56 based on the recent week. Then I would recommend at least identifying the TP at 2016, right? By identifying the TP at 2016, we are increasing the probability of booking a successful short trade. We can see the current 4-hour candle, gold is falling. So should it continue to fall here, identifying a TP that's slightly above 2015.56 would help us book or improve the probability of booking a profitable trade, right? Okay, so this is what we have for gold. All right. So is there any requests, guys? Is there any requests, any currency pair or crosses that you would like me to cover? Otherwise, I'll just look at the euro and perhaps I'll look at the pound as well. Right, okay, so let's look at euro here. Right, so similarly, you can see that this support level at 1.0742 is indeed a strong support level, right? Price finding support here on 8th of December, 11th of December before bouncing higher. So when price was falling sharply yesterday, right, we would have identified this zone here as a potential take profit. In this case, in this scenario, we can see price actually breaking below the major support, but of course, we can never be too sure. So by identifying a take profit at about 1.0750, at least we would have been quite confident of booking a profitable trade here. But of course, if we had identified our TP over here at 107.1.0733, maybe it's quite likely we may have missed this as well, right? But you can see by placing your TP slightly above perhaps the absolute low of the wick or at the body of the candle here, we would have improved the probability of booking a successful trade. Right, so this is why identifying major support and resistance areas are important so that we can identify suitable take profit levels. Right, so this is how we've identified the first support at 1.0742 for the euro. Second support is probably, maybe this is a bit too far, at this pullback resistance here. This was the previous pullback resistance level at 1.0712. This could potentially function as now a pullback support. Right, so this is how we identify the second support. So should price reverse from the first support, which is at 1.0742, should price reverse from here and continue to drop lower, we can identify a suitable TP level at about 1.0715. So maybe if we put our TP 5 pips above this level, for example, so at about 1.0718 to 1.0720 is where we can identify a potential take profit zone should price for the euro reverse from its current level and drop lower, right? So this is how, by identifying the second support at 1.0712, then in turn helps us to identify a potential take profit level at about, let's just say, 5 pips to 10 pips above this support, right? This is the uh, uh, what do you call it? The the reason for identifying support levels or resistance levels to help us identify suitable take profit opportunities. Okay, so this is what we have for the euro. Okay, let's look on the resistance side. We can also do a Fibonacci retracement here from 2nd of Feb down to this low here on 5th of Feb. We can also see that this pullback resistance here lies quite close to the 38.2% Fibonacci retracement, right? So you can see this is where the current resistance level lies. So you see a pretty decent pullback resistance level here at 1.0795, aligns well with the 38.2%. First resistance is clearly this pullback resistance here, the strong pullback resistance at 1.0890. And the second resistance is this other strong pullback resistance at 1.0927. Okay, so this is what we have for the euro. All right, if there's no other requests, then I'll just, I think I'll be able to cover one more or two more analysis. I'll just cover the pound. So this was how the levels prior that were identified last week, towards the end of last week. So clearly this level here now is most likely going to be our second resistance. This pullback resistance here could now potentially function as the first resistance here. We did have a Fibonacci extension. We don't need that. Right, first support here, we can see, right, with price falling sharply yesterday for the pound, and we had identified the first, which this should now be the first support. By identifying 2508 as a major first support, and if with price falling lower here, we should be identifying a suitable TP just above it. So if you had placed the TP, let's see how low price went. In this case, price dropped as low as 1.2518, which is 10 pips above this major support here. See, so by placing the TP at about 10 to 15 pips above this major support, we would have sort of maximized or would have booked the profitable trade here as well, right? If I place our TP at exactly 2508, or maybe even at the absolute low of the wick here, which is about 1.25 exactly, right? We would have missed out on this trade here. So with price, by identifying a TP, suitable TP that's slightly above a major support zone, we would have exited this trade yesterday and would have booked a pretty decent profit as well, right? So this is why it's important to identify support and resistance areas and then place our TPs accordingly, right? By placing it above a support area in the case of short positions, and by placing it underneath the resistance in the case of long positions. All right. Okay, so these are the first resistance, second resistance, first support. Where could the second support be for the pound? Perhaps we can use this bottom of this wick here, right? We can see price finding pretty decent support level here before bouncing, which is at 1.2450 on 22nd of November. So this is probably a good level to identify as the second support. So similarly, should price break below this first support at 1.25 08 and continues to drop lower, and because we know the second support is at 1.2489, we should at least be looking at about 10 pips above this level here, the support level here, to identify a potential take profit. All right. Okay, so that's what I have for today. All right, so maybe I'll just quickly recap uh, today's webinar as well. This was part one of trade management, right? So basically, when we look at uh, placing or identifying TP and stop loss levels, we should, okay, let me just clean up this chart first, or this slide. Let me just clean this up first before I do the recap. So in the example of here where we have range bound trading, or as we saw on the charts, right, as we saw on the live charts as well, by identifying major resistance areas, major support areas, right, then we are then able to identify suitable stop loss levels as well as take profit levels. So if you are shorting a particular instrument based on a resistance, right, major resistance, we go short, then the stop loss level needs to be placed beyond or above the resistance area. And then with price falling down towards a major support level, then the TP should be identified slightly above the major support. Right. Similarly, when we go long on a position, we have identified our buy entry at a major support level. The SL should be placed slightly below it. And of course, with price rising up towards a major resistance, the TP would then need to be identified or placed slightly below the major resistance area. So all these uh, dynamic placements for the stop loss and TP helps us to uh, improve the probability or increase the probability of a successful trade, whether we go long or short. All right. Okay. So that's all I have for today. Before we end, I'd just like to launch a poll, and I'd truly appreciate if you guys can give your feedback as well. Right. Thank you all for tuning in today. Hope this has been a great session for all of you. Do take note that is quite a heavy calendar as well this week. So we've got various FOMC members speaking today, tomorrow, and Thursday. So they could drop clues as to how the Federal Reserve is going to react with the outlook on future monetary policy. So do take note the dollar has been very strong recently because of the strong NFPs last Friday. We do see demand for the dollar picking up and is quite likely to remain strong as well. But of course, there's always pullbacks along the way. So these pullbacks could help us identify potential long entries for the dollar index. All right. Okay. Thanks everyone for tuning in today. Hope this has been a great session for all of you. And do look out for all upcoming uh, webinars by XM, right? All right. Thank you everyone for tuning in today, and I wish you all the best in your trading journey. And I'll catch you all at the next webinar. All right. Thank you everyone. Take care and have a great trading week.